Access to capital is an essential part of doing business. Research conducted by Global Capital Inc. and 10X Branding Marketing LLC out of New York is showing that over $1.7 trillion is available among private equity investors in dry powder. Now, in spite of this, we're seeing micro, small, medium, and large-scale businesses across the world continue to struggle to raise capital to invest in the growth, diversification, and the scale-up of their brands. The private equity investors, they are thinking cash flow and they are thinking risk control. And if you're able to put yourself in that position of strength to be able to speak to these two issues, cash flow and risk control, you may be very surprised to see how quickly you can access equity capital market when your brands are positioned in front of the right private equity investors. I want to encourage you to join me on this journey as we continue to do a deep dive into best practices to access the capital market. In this program, we will continue to look at the credit capital market, the debt capital market, equity capital market, and smart capital market. Join me as we explore the world of finance. Of doing business. Research conducted by Global Capital Inc. and 10X Branding Marketing LLC out of New York is showing that available among private equity investors is over $1.7 trillion in dry powder. What this means is that there's monies available. All right, there's equity capital available to be pumped into business development. But it's important to recognize that private equity investors, although they have the capital, they continue to think a safe way to cash flow that capital. And they're also thinking about risk control. So in today's program, we are going to be speaking to those two issues: cash flow maximization in the best interest of the private equity investors and in your best interest. And we will also be looking at a number of control factors. And the control factors will be examined under what we're going to term the pre-qualification criteria. And this is absolutely necessary for you to consider and to think about when you're positioning yourself to access the financial market, particularly so the equity capital market. Now, in the event that you're joining me for the first time, my name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the best-selling, self-published, best-selling author for several books, including Billionaire Codes and Manager's Toolkit. I'm also the author for 10X Branding and Marketing Blueprint, The Psychology of Doing Business. And of course, this book is largely for those who are in business and you want to understand A to Z in branding and marketing. This is a very unique program for you. Now, I'll go to the table of content today to give you some insight in terms of the topics that we're going to be covering today. Today, we will be looking at equity capital and the pre-qualification criteria. It's important for you to understand those pre-qualification criteria for equity capital. We will also be looking at the business landscape ecosystem it's important to take the time out to understand the business landscape ecosystem. I'll explain what is that before this program ends today. And we're also going to be doing a little surface analysis of what is going to be known as knowing what is the system value proposition 101. My promises to you is that over the next few days, I will take the time to go step by step. And that is to really demonstrate to you and explain to you the importance of these three table of content, the three issues that are appearing on the table of content. One is for you to understand what is the equity capital market, the pre-qualification, and today we're going to go deep into that. And over the next few days, we will be examining the business landscape ecosystem. How important is this as it relates to positioning your business, your brand to cash flow maximize? We will also be looking at the system value proposition 101. How important is this to your business cash flow? And of course, what we are doing here at Global Capital Inc. and 10X Branding Marketing LLC out of New York, we're doing research across the world. We are studying the top 100 companies, and we are really beginning to extract some of the new unique systems that they are using to capture their attention of the workforce, to capture the attention of the target market, to capture the attention of the general public, and to position their brands for cash flow maximize. So of course, over a period of time, we will be bringing those content to you. So if you see yourself as the entrepreneur who is not settling for where you are, but you want to emerge now as the global thinkers, the social actors, and the transformational leaders, we will be providing you with a content of information that will quicken your steps along those paths. Remember, Global Capital Inc., we are all about bringing information to you about capital markets. We believe across the world, it is necessary to amplify conversation around debt capital, equity capital, credit capital, and smart capital. Of course, if you're in business, it's absolutely necessary to have a rounded knowledge of these capital markets. The key is to understand the market. The key is to understand how to access this market. The key is to understand how to leverage this market. The importance is to understand how to mitigate this entire financial platform. And of course, on the other hand, we have 10X Branding Marketing LLC out of New York. And this brand, it's all about working with you, whether you're a business startup or whether you're a big business. And which is to work with you to really help you to build out a larger than life, a very strong brand image. And there's a lot of beautiful content here. Here we talk a lot about the system value proposition 101. I'll talk a little bit about that today just to give you some insight into what this is all about. But this really helps you to understand how to build out your corporate culture, how to build out your value proposition, your brand traits optimization, to really help you to dig in deep and to develop your blueprint that literally allows you to achieve public confidence and trust and credibility over a period of time, and definitely over a shorter period of time based on the techniques that you're going to be using. All right. So today you have the table of content of what we're going to be looking at. We are talking about equity capital markets. We are talking about private equity investors, and we are saying that there's over $1.7 trillion that is available among private equity investors. But in spite of the fact that this is available among private equity investors, we're seeing thousands of entrepreneurs, micro, small, medium, and some large-scale businesses across the world that still struggle to raise capital. You're struggling, is it because of limited information? Is it because the enabling environment is not there? Or is it because you are not ready to access these capital markets? Today, what I will attempt to do is to look at some of those pre-qualification criteria that will help you to become more ready to access these markets. All right. So we are going to attempt to go into the minds of the private equity investors. And once you're there, you should now begin to have a clear mental picture as to what is it that they're looking for. And once you know what they're looking for, it means now that you can take informed action to build out your brand, to build out your sales pitch, to build out your value proposition to appeal to their interest. In the beginning, I said that as a private equity investor, you are thinking two things. One, how to cash flow maximize. Because in most cases, the capital that you have, the dry powder that you have is not yours. You are taking capital as a private equity investor from sovereign wealth funds, from pension funds, from insurance funds, from high net worth individuals, from super high net worth individuals, from university endowments. You are taking capital from all of these places. And your role as a private equity investor is to put this capital on the management so as to ensure that you're getting high dividend yield. So you have dry powder, you have the capital, and you're constantly asking yourself, what are the best approaches that you can use to cash flow maximize this capital that is now in your portfolio? But while you think about this, you're going to be very selective because, again, a private equity investor is different from a venture capitalist. A private equity investor is risk averse. They do not want the risk associated with investment. So they will do tremendous due diligence before they allocate any funds to potential beneficiaries. The venture capitalists, on the other hand, they are risk oriented. Today, we are not talking about the venture capitalists, we are talking about the private equity investor. And it's important for you to take that time to really get into the mind of the private equity investor. So one of the first things that we're going to begin to do here now is to examine what are some of those pre-qualification criteria that you should consider when you are attempting to position yourself to access equity capital market and the private equity investors. One of the important things that research is showing is that any investor that is going to be considering to invest with you, one of those things that they're going to be looking for is your team dynamics. Yes, no man is an island. And the private equity investor knows this too. So they're going to be looking into your team dynamics. What exactly is the importance of your team dynamic? It is clear, again, that you might be an excellent innovator of a product or a service, but you definitely may not have the general skills that is necessary to catapult your brand and your ID to where it ought to be in order to cash flow maximize. And where it ought to be is to be built up in the minds of the public locally, regionally, and internationally. You need a team dynamics to make that happen. So the private equity investor, yes, they're going to be looking at your innovation. Yes, you are the brain behind the operation. But who are your strategic, tactical, and perhaps your operational team that are well trained and well oiled to ensure that they are all in alignment to get you faster, easier, more cost effectively to the path that you want to be. Cash flow maximize, sustainable cash flow maximization. So important team members for you to consider, and I'm going to list a few of them here, and then I'm going to explain the importance of this team member among your team dynamics. One of the things that is necessary is to have what is known as the CFO. That's a Chief Financial Officer. And of course, the Chief Financial Officer must be more than just the individual, or must have the talent base that goes beyond just accounting finance. And I'll explain that just now. You also need to ensure that among your talent base that you have excellent researcher, market researcher. And I will explain this again. You need to also ensure that you have branding and marketing representative, a branding and marketing manager, and a public relation manager, and a digital marketing manager. Why is all of this important? And the list here is not exhaustive. So depending on the vision of the organization, depending on the type of organization that you have, will ultimately influence the organization chart that is most appropriate to the organization. A private equity investor will be looking at this. A couple of other things that I must emphasize. In all the cases that we're looking at, as you position your business to access private equity investment, you have to move away from a sole trader ideology. You have to move away from me, myself, and I ideology. You have to now start thinking about LLC. You have to start thinking about S Corp and C Corp. You have to start thinking about incorporated. Your company has a legal identity, all right? When you become a LLC, S Corp, C Corp, or incorporated, as against if you're a sole trader. As a sole trader, you and the LP, the limited partner, your investors, they are at risk if anything goes wrong. And that means that they can be sued. Let's take, for example, your brand is, you're dealing with energy boosters and health products and pharmaceutical products. Let's just say that that is an example of your brand. But to scale your brand, you have to bring in investors. So you bring in the investors, and the investors is working with you as a sole trader. Is there any risk? Yes, there is, because if something goes wrong with your product, let's take, for example, someone is using one of your pharmaceutical products and they recognize that they're losing here based on that, or it is triggering off some kind of mood swing, and they can prove that the tablet, your product is causing that. You can be sued for the clothes on your back. The private equity investor is smart enough to know this from the get-go and ensure that they take every precaution to ensure that they're safeguarding themselves, but also they're safeguarding the investment that are coming to them from the sovereign wealth funds, from the accredited investors, from the pension funds, from the insurance funds, from the super high net worth individual, the high net worth individual, from the university endowment. They have to protect those interests. And the only way you can do that is to make the entity its own legal entity. Later on, we'll go into all of that to really help to understand some of the legal advantage in setting up a private, a limited company, a public limited company that limits your liability. All right. So coming back to the topic, we're talking today about the pre-qualification criteria. And we said that what are the pre-qualification criteria that you should be prepared for when you're accessing, getting ready to access private equity investor is to consider your team dynamics. And we just identify a number of those team players. And one of the first team players we talk about is your CFO, your Chief Financial Officer. Why is this important? Because your Chief Financial Officer is the individual that can not only analyze the potential of the business to cash flow, but you need to ensure that you have the kind of chief financial officers on board with you that also perhaps understand how to access the DCM, how to access the ECM, how to access the CCM, and how to access the SCM, meaning the debt capital market, the credit capital market, the equity capital market, and the smart capital market. And it's important to not understand how to access it. But in our platform, we talk about understanding these portfolios, being strategically positioned to access these portfolios, being strategically positioned to leverage these portfolios. And by leveraging, that means deep understanding how to leverage it. And most importantly is to understand how to mitigate this process. So it makes sense if you have a CFO, a Chief Financial Officer, that understands this entire process. Ask yourself this. You're bringing in investors who are your LP, a limited partner, because they may not take a seat on the board to become a GP, a general partner. What level of confidence are they likely to have in you, in your company, when you can demonstrate to them that your CFO is excellent in terms of managing the financial portfolio? Because of course they're bringing monies to you. They're not bringing their capital to you. They're bringing their partners in the capital to you. So they need to know that you can manage this portfolio. So this may be tough for a lot of small companies to achieve this, because what we're seeing is that a lot of micro, small, and some medium-sized businesses, they don't have a CFO. They do not have a market research specialist. They do not have a branding and marketing specialist. They do not have these essential stakeholders that are so vital in creating a strong impression on the minds of investors. So remember, a private equity investor, they're risk averse. And the moment they start to see risk, They are making analysis. I remember I said at the beginning, they're thinking cash flow maximization, and they're thinking risk control and risk mitigation. And you need to get these two things out of the door immediately and remove fear that surrounds these two things. And you can do this and do this effectively by ensuring that you have a strong C certified public accountant, a chief financial officer that can help you navigate this process. Now, in the event that you can hire this individual full time, one of the smart things to do is to perhaps have a subcontractor that are handling your financing records that can make representation for you. All right, that can make representation for you. That can go very far away to making the kind of impression that you want to make on the private equity investor as relates to the business potential to cash flow and the leadership ability of that firm to mitigate risk, to control risk associated with managing debt portfolio, equity portfolio. All right. So I'm just giving you some surface information here to lend to the justification of your preparedness, of why you should take this line when you're preparing yourself to get into private equity and capital. Now, let's look a little bit at the next area of the team dynamics. We talked so far about the chief financial officer, the research expert is also essential here. Why is research so important? Your private equity investor is going to be testing you on market intelligence. Your private equity investor needs to know that you are market sensitive and you are market oriented. So your research expert among your team dynamics will be able to help you to identify your specific target market. In identifying your specific target market, they go through all of the rigor to understand the needs, wants, and expectation, dreams, hopes, and aspiration, lifestyle, culture, and social class of the target market. But beyond this, they understand the size of your market. They understand the size of the market locally, regionally, and internationally. And it is based on this hardcore market intelligence, they are now able to do financial projection. These are critical information that your CFO will need to have, because your CFO is the one that's going to prepare the financial projection. But to remove the CFO from preparing a speculative financial projection or prepare the financial projection based on speculative data, you need to ensure that the researcher is doing the right research to get that kind of information. Again, to hire these kind of high profile, high net worth knowledge base within your organization is going to be costly. But to not have it, it is what leaves you exposed and also leave you in that position where you're not able to make the strongest impression on the private equity investor. Because as I said at the beginning, among private equity investors, they have over $1.7 trillion to be invested into businesses. And the reason we call this dry powder is because they have the capital. They have did excellent in raising the capital in their portfolio as private equity investors, but the capital is sitting there and is not being invested. So we call it dry powder. And guess what? It continued to increase and increase and increase year after year because they are not finding credible portfolios to invest in. So when you take a deep look into these things and you adopt it and you apply it to your organization, and you now go after private equity investors, you're now able to make an excellent sales pitch because you have the team dynamics to influence public decision. All right, to influence the private equity investor decision to now want to work with you. So there are many other things to look at in your team dynamics. So far, we look at the importance of the chief financial officer. We look at the importance of the research team leader. How about branding and marketing? How important is this? Is this able to make an impression on your private equity investor? Yes, it can. Your brand represents every element of your organization. Your branding and marketing must be built out in such a way to have large-than-life impact on your workforce, to have large-than-life impact on the specific target market, to have large-than-life impact on the public, and by extension, set the stage to ensure that the brand can cash flow maximize. Hence the need for branding and marketing. The branding and marketing manager is the one who is going to be interpreting the market research data. Because from the market research, you understand people's needs and wants and expectations and dreams and hopes and aspirations, their lifestyle, culture, and social class. So he or she takes that data, they analyze that data, they innovate a brand, and then with branding and marketing, they are now able to leverage brand visibility blueprint and so much more. All right, the reach visibility blueprint, the impact visibility, the impact blueprint, customer impact blueprint, the customer conversion blueprint. All right, the confidence building blueprint, the trust building blueprint, and the credibility building blueprint. So there's a system, and each of your subject matter experts within your team dynamics must be the people that understand their portfolio and can effectively execute their responsibilities within their respective portfolio, so as to ensure that they're one, helping the business to achieve the business strategic objective. They are building confidence in your investors. They are building public confidence and consumer confidence. And they're setting that stage to ensure that your brand, your business, your idea, it's on a platform to continue to grow and expand and develop. And of course, as I'm saying, the top 100 companies in the world, they are not reacting to market realities. They are proactive. So as you build out your team dynamics, it's important to incorporate in the culture of the organization the thought process, the brain power, the think tanking capabilities that are nurturing team leaders that are being proactive in managing your brand. Can this help to influence accredited investors? Yes, it can. Can this help to influence the private equity investor? Yes, it can. So far we are analyzing the importance of the team dynamics, and this is only one of those pre-qualification criteria. The other pre-qualification criteria is what we're going to call the corporate culture. I already give you some insight into the corporate culture. You want to build out your corporate culture because they will be looking at it. What does your corporate culture says about your team dynamics and the systems that you have in place to reduce absenteeism, to remove staff turnover, to create that environment where your team are highly motivated and self-motivated and proactive and excited to come out to their community of work. They will be looking at this because a smart private equity investor, again, they are fully aware of how much absenteeism and staff turnover can affect the business ability to cash flow. Because when you have absenteeism, it affects productivity, it affects distribution, it affects public relations, it affects a range of different things. And by extension, it's going to affect the business potential to cash flow. And if anything is threatening the business potential to cash flow, it's going to affect their dividend yields. And if it affects their dividend yield, it's going to affect how much they can pay back to their borrowers. And if they are paying zero or limited amount to their borrowers, believe me, the persons who are investing with them will take their capital elsewhere. So there's a chain of effects, yin and yang, that is taking place here. And it's important for you to get inside of the mind of the private equity investor as you position your brand, your business, to build out networking and relationship with the private equity investor. All right. If you have to go through absentee staff turnover, it's going to affect your business because you have to go through the recruitment process, the selection process, the training process, the acclimatization process, and all of that takes time, money, you're losing income. So it's important to be able to do this. And this again is one of the reasons why you find private equity investors doesn't happen instant. It takes a process because they are doing that due diligence with you, so as to ensure that you're ready, so as to ensure that you're making the smartest decision. They are making the smartest decision to invest with you. And in spite of the fact that they do all of this, there is so much to say about their investment portfolio and the exposure of their investment portfolio. At another day, I will go into that. And of course, we are looking at innovative approaches that can be mitigated, that can be leveraged to further bring down any risk associated with equity capital. So something else to consider as you're positioning yourself to access or build out relationship with the private equity partner is to do the market analytics. Again, as we talk about the market analytics, is not only to be market sensitive and market oriented, is not only to understand your market enablers. And the market enablers are tremendous. The market enablers can be your relationship with the chambers of commerce, your relationship with trade association, your relationship with government agencies, your relationship with the business community, with your consumers. It's important to understand your enablers, your relationship with financial institutions. These are all some of your enablers. And it's important decision for them to make. They look at some of these things to ensure that things are looking the way they're supposed to be looking in these regards. And again, in many cases, we're seeing again micro, small, and some medium-sized businesses that do not have the wherewithal to make these kinds of impression upon the minds of private equity investors. So they have to now resort to what you might want to call the venture capitalists, because a venture capitalist may be willing to invest in a business pre-income. We look at that another day. But it leaves a wide cross-section of businesses out in the cold, out in the open, not able to access this capital portfolio provided by the private equity investors. And again, we have over $1.7 trillion that is available among private equity investors. But the key, you got to be, a business. You got to be, ensuring that you have these data in place to be able to make that kind of impression. The next pre-qualification criteria that they may be looking at is what is known as the financial data, historical financial data, and audited report. Of course, I did say to you at the beginning, you have to move away from the mom and pop. You have to move away from the sole trader, and you have to now become a incorporated LLC, S Corp and C Corp. And once you become this, a company, it simply means now that you have to be audited. It simply means that you have to have either a CPA, a certified public accountant, to audit your financial and ensure that you have the records there. So you can easily transfer this knowledge to the private equity investors as you're positioning your business, your brand, to raise capital to further expand your corporate vision. So this is another pre-qualification criteria that is important for you to consider. Some of the other things that is important for you to look at, I'm going to look at one more thing here today, is market entry and market exit. Now, we are fully aware that many small businesses, they are afraid to play in the space of private equity investment. And of course, they have quite legitimate reasons to be concerned, because things that you need to be clear about as you position your brand to access private equity funding as against public equity funds is to truly understand the entry and the exit. Now, what happened in most cases, most entrepreneurs is just thinking of capital access. And sometime later down in that agreement, then you start to think about exiting the market. One, when a private equity investor comes in to invest, they are not coming in to invest with you for an indefinite period. They're coming in to invest with you for a finite period, meaning that they're going to be investing with you for between 5, 7 to 10 or 12 years. That's the period. All right. In most cases, if it's a growth fund, if you have some of the technical support, it may have a short life cycle. If you know, the funding has the kind of flexibility, it may be for a longer life cycle. But at the end of the life cycle of that arrangement, they are going to cash out of this partnership. You being the GP, they being the LP, the limited partner, if they have not taken a seat on your board. And how are they going to cash out? Now, the way in which they cash out can leave you exposed. And this exposure, I believe, is what most people knowingly or unknowingly is afraid of. The way private equity investors cash out of a deal is by taking it IPO. And what IPO means is that they're taking it to, it is an initial public offer. It simply means that the business has cash flow, because of their involvement, because of the capital input that they have been able to make, the business has grown, the business has a certain cash flow, and they are reaching pre-qualification criteria now to be listed as an IPO. But being listed as an IPO, it creates exposure. One, it means that you are no longer a private company, you're a public company. And the difference between the two is that all of your financial data is no longer private, it's public. Once they're going to push you to go listed as an IPO, initial public offer, all of your data is now public information. Why? Because going to IPO, it means that you open up the platform, you open up the door to raise additional cash. One, for them to raise those capital and cash out, and perhaps the excess, you can pump it back into your business. You have to ask yourself if this is the cash out strategy that is best for you. Now, in the absence of thinking through this process, this is where, an area of concern, this is an area that must be properly mitigated. So again, I'm trusting that your financial advisors, your certified public accountants, your private equity, support network is really working with you to really help you to make informed and educated decision about it. There's nothing to be afraid of here, because what is the only thing that you should be afraid of is not having the knowledge, not having the information, and not having on your team dynamics knowledge sources that can represent this area of what you're doing. All right. So this is one way in how the private equity investors, all right, cash out from the deal. You have to ask yourself if you're comfortable with this. Another approach that the private equity managers use is what we call sell to management. And this one is something to smile about, because what this does, it opens the door for you to buy out the private equity investor. So you remain private because you want to remain a family company. You want to remain a private company. You don't want your data to be out there, like the top 100 companies and so forth. You're not ready for that as yet. But if you're ready for that, it's a brilliant thing to cash out going IPO. It is a brilliant thing to cash out going IPO. If you are ready to scale up to that level and make your financials and other, data public. It has to go public because they invest in public. They must be in a position of strength according to the SEC, the Security Exchange Commission. They have to get those data to be able to make an informed and educated decision as to the reason why they should invest in your business, whether they use that information or not, whether they access that information or not. All right. Once you go public, that's it. But in this case, once you go public, you can turn back. A lot of companies across the world now are pulling from public back to private. At another day, we're going to be looking at that. So you understand two exit strategies: IPO and management buyout. Some other portfolios that you can look at is to consider. If you're not looking at it, remember they are thinking about the exit strategy. All right, they're thinking about the exit strategy. So those fine prints, you need to read it. You need to understand it. You need to have your equity partners that are going through these things with you to ensure that they understand it. All right. They can also sell to another private equity investor. And what that does, instead of taking you public, you have another rung of private equity investment. What also happens sometimes, the private equity investor, once the portfolio is delivering the kind of dividends that you expect, they expect it to deliver. Instead of cashing out at the end of the life cycle, they themselves may be able to go a second round with you. All right, it all depends on the cash flowing potential, the profitability, and also their investors, where they're accumulating the capital from to invest with you. All right, because they may access capital that has timelines and deadlines. All right, a big sovereign wealth funds might be maturing at a particular time. They may have to return capital at a certain time to ensure that those portfolio owners and managers are cashing out. All right, are getting what is belong to them within a certain period of time. Why? Because it's going to affect credibility across the board if this doesn't happen. All right. So I trust today that you really pay close attention to some of these issues that we talk about. And this is level 1 of the pre-qualification criteria. As I did say to you that today, our table of content covers 3 areas. And all we look at today so far is equity capital markets and the pre-qualification criteria. That's all we examine today. And of course, there's some private equity investors, as they do their due diligence, they may drill even deeper than what we looked at today. But my belief is that if you prepare yourself for things up to this point, you can withstand any scrutiny. All right. We know to get to this point, and it's going to be, an upward battle for micro, small businesses, but we believe that you can get there with the right mentorship and coaching and support. We believe you can get there. All right. Success is not overnight. It's a process. The key is starting that process. You can start it with baby step, and then you upscale it to where you want it to be. So today we have three things listed on the table of content is private equity capital and the pre-qualification criteria. You have those information. We also hinted that we're going to talk very briefly about the business landscape ecosystem. And I'm going to go very, very brief at this. All right. As any investor considering investing with you, it's important to take into consideration a whole range of ecosystem. And based on our research, studying the top 100 companies, studying successful companies and brands across the world, there's a few ecosystems that stands out to us. This may not be exhaustive, but these ecosystems certainly stand out. And we talk about one already. We talk about the corporate culture and the business value proposition ecosystem. This is something that you cannot take lightly because the corporate culture influence, this ecosystem, it must be built out to impact the workforce, must be built out to impact your target market, must be designed to impact the public, and the public are not only influencers, they're also accredited investors, they're also the private equity investors, they're also a person in the debt capital market, they're all a part of the public, and you want to ensure that your culture is designed to make an impact at all of these levels. This, by extension, is going to set the stage to impact the business potential to cash flow. So understanding this ecosystem, and we go deeper into this for you to really understand this and to understand it and apply it effectively, so as to ensure that those best practices, they are working best for you. Of course, there are other partners that we're going to be networking with, those who are strong with the ISO standard, because the ISO standard is going to also help you along some of these lines. The other ecosystem that we talked briefly about just now also is the team dynamics and team management ecosystem. It's important to understand this. We separate team dynamics and team management because of the significance that it relates to. And you had some insight into that already. We dig into a little bit into your team dynamics. But in this here, the ecosystem, we go even deeper, so as to ensure as you understand these portfolios that you are systemizing them. They must be systemized. Our success can only be built on systems. What systems allow you to do is to build on transparency, accountability, consistency, scalability, transferability, traceability. The system allow you to obtain this. Along with this, we talk a lot about the market research and market intelligence ecosystem. The successful businesses that we're studying across the world, they have these ecosystems. They do market research. And I did explain to you the importance of doing market research. All right, if you just start an operation in a particular field with no research and something goes wrong, and when you have investors on your side, it's not only affecting you, it is not only affecting the beneficiary, it's affecting the investor, it's affecting also who the investors are taking their monies from. It's affecting the entire chain. So market intelligence that comes from the market research and being able to leverage this information appropriately is vital in preparing a successful business and a successful brand. We dig into this very deep to ensure that you have these ecosystems set up. It must be an ecosystem is not that you just have a market research manager who is simply doing, random research. It must be built out into an ecosystem. We also talk about the capital market and the business cash flow ecosystem. This is also very important because it's not just about understanding the DCM, the ECM, the SCM, and the CCM. It's about understanding cash flow. And of course, when we talk about cash flow, we are talking about the business cash flow and potential divorced from the primary source of income. So if you are a company producing a particular product, and that becomes your primary source of income, we ask you and we ask ourselves, we get you to ask yourself if there's any smarter way to cash flow. And believe me, there are several different ways in which this can be done. All right, several different ways. And what that does at the end of the day is to ensure that the business is cash flowing above the financial projection that may be established in your business financial projection. Because the traditional financial projection is simply based on the business potential to cash flow based on this primary income source. But here is where we introduce secondary and tertiary income source. Those things that we're going to go into later on. And of course, as we look at smart cash flow and opportunities, we are extremely risk avert with the systems that we're going to be presenting to you. We only speak to cash flowing platforms that you can mitigate the risk, you can control the risk, and you're able to significantly up-level the cash flow potential from those particular portfolios. Again, when you get into the master classes, when you get into our consultancy, when you become a client, these are things that we're able to walk you through. All right. These are things that we're certain that will help you to make a stronger impression on the private equity investors. You need to know how they're thinking so you can ensure that when you make that sales pitch, you are pitching way above their expectations and you're building confidence, way above where it needs to be. So it guarantees that you're going to, get the financial support that you need to move your brand to a whole other level. The last ecosystem that we're going to be looking at here today is what is known as the economic ecosystem. And this is self-explanatory. If you are an economist, you know what economic system represents. All right, it is different to play in a planned economy as against an open economy. It is different to play in a mixed economy as it is to play in a planned economy. So it's important to understand these economic systems and to really understand what it will take to integrate where it is necessary, where it makes financial sense into these systems, and to ensure that you understand this system. Not knowing how the game is played in certain ecosystem can hurt you tremendously. All right. So as you come into the master program, we will go into this, and perhaps over the next couple of days or weeks, I will spend some time just dipping a little bit into this and the ecosystem, the 5 ecosystems that is necessary for business success. All right, because it's not only based on the business strategic plan that you're going to develop, it depends on the political environment and so much more that you're going to be playing in that you need to understand. Now, the last subject that we're going to talk about here is In my presentation, I also said we're going to be talking about the system value proposition 101. Now, the beauty about system value proposition 101, what system value proposition 101 does, it takes the first ecosystem, which is the corporate culture and the value proposition, and it builds a whole story around it. Because remember, the corporate culture, the business value proposition ecosystem is what is being communicated to the workforce. This is what is being communicated to the public. This is what is being communicated to your investors. This is what is being communicated to the specific target market. And this, by extension, is what's going to allow you to cash flow maximize. But the issue of cash flow maximization, it is subjective based on the fact that you can have an excellent ecosystem, corporate culture, and value proposition ecosystem. But if it is not properly systemized, meaning you now have the ecosystem, but the ecosystem is now, which is which we're going to call it the business value traits. All right, the business value traits. All of that now has to be packaged in such a way to be easily communicated. And those things are going to be communicated in what we call the communication optimization process. That's going to be communicated in the brand reach optimization process. You need to have systems for all of these different things. Brand visibility, brand reach, brand impact, brand conversion. All right. If the brand is not, you're not converting consumers into brand users and into lifetime consumers, you have an issue. So what system value proposition 101 does, it collapses the entire corporate culture into this unique system, and it walks you through a step-by-step process, showing you how to take this entire brand, the entire corporate culture that is impacting the workforce, impacting the target market, impacting the public, and the bottom line of the organization. It's going to take it all the way up to brand confidence, trust, and credibility. And if you guys were following my previous broadcast, we talked about this. Some of the top 100 companies, like the Google, the Microsoft, and the Apple, they have built out their corporate culture to impact the entire workforce. Their employees are given opportunity to do regular medical checkup. Guess what? At no cost, because the organization understands the importance of having a healthy workforce. To impact the workforce, they have gyms at the workplace, at specific locations, at no cost. They have recreational facilities at no cost. They have, launching facilities at no cost. We know that these are the big companies. They are generating hundreds of billions of dollars. We know many companies, small, may not get there, may never get there, depending on your ideology. Well, our role is to simply give you those information. Our role is to inspire you, and our role is to ensure that we're using our team here at Global Capital Inc. and 10X Branding Marketing LLC out of New York to not only inspire, but it's to give you the institutional support to leapfrog and 10X your business development process. We're here to give you that support. So we bring the entire value proposition into this to show you getting visibility, because visibility doesn't mean reach. To ensure that you're reaching the specific target market. To reach the specific target market does not mean that you make an impact. To impact the target market. Once you're impacting, you want to convert, and once you convert, you want to convert to life. That can only happen based on intention and a strategic game plan. And that strategic game plan must be built out in such a way to allow you to easily achieve confidence, trust, and credibility in the eyes of the stakeholders. We are not finished here. When we finish with this, we bring you over to another systemization platform where we take the entire process and we talk to you about system transparency, where we talk to you about system consistency. You want to be transparent and you want to be consistent with the things that you're doing that are working for you. You want to have accountability. What are your accountability systemization processes? Do you have this in place? What is working? You want to scale it. Why? Because the business climate are always changing. And this is one of the reasons why you need to have your global thinkers, social actors, and transformational leaders, your dream makers, your game changers, your trendsetters that can help you and support you in the process of constantly innovating new ideas, better ideas in terms of how you're going to be doing things. The world is moving so fast into AI, artificial intelligence, and artificial intelligence is impacting the workforce tremendously. It's impacting the production line tremendously. It is bringing down cost of production tremendously, so creating opportunity to increase the profitability of company tremendously. So in looking at system scale up, you want to be ensure that you have your think tankers that are thinking through this entire process. Again, I said, real leaders who they're not reactive. And again, we at Global Capital Inc. and at 10X Branding Marketing LLC out of New York, we have coined the term the proactive leader. And the proactive leader display three essential characteristics. They think ahead, they see beyond problems, and they take informed action to achieve the desired result. We at Global Capital Inc. and 10X Branding Marketing LLC out of New York, we are here to give you that kind of institutional support to 10X and leapfrog your brand. So as you scale, we want traceability. And as you scale, we want transferability. So what you're doing in one area of business, what you're doing throughout the entire value chain of the business, you could easily transfer this entire system to a different region in your country or a different part of the world, and you can easily transfer those systems. All right. When we look at franchises like the Popeyes, the KFC, the churches, these are all blueprints. They're systems. And all of the franchisees or franchisors, The franchisees, they have to comply with the established status quo in representing the franchise. So we went to some extent level 1, level 2, and level 3. We can go deeper into this, not today. All right, over the next couple of days, let me see what happens. I'll present you some more information on this. But of course, you take all of this into consideration, you have these strong systems. Believe me, you will have private equity investors knocking at your doors. You will have accredited investors, you will have debt capital portfolio managers knocking at your doors. Because why? In their eyes, you have established management credibility, and everybody wants to work with those who can establish management credibility. So again, my name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the self-published best-selling author of several books, including Manager's Toolkits, Billionaire Code. I'm also the author of 10X Branding Marketing LLC, 10X Branding Marketing Blueprint, the psychology of doing business, and that's an excellent book. I'm not blowing my own trumpet, but we have done a lot of research. We have done a lot of research because we take you serious, and we have put so much into this book, and we are still putting more into the book to ensure that when you get the book, all the things that we're talking about here, it's there. You can use it as your blueprint to build a strong brand. And of course, you're going to have our technical personnel, our subject matter expert, because we have a team of economists, we have a team of certified public accountants, we have a team of business consultants, and a team of lawyers that's going to be working with us to extend that support to you, to ensure that we are carrying the fight in a strategic way, to ensure that we can give strong representation, the strongest representation to our clients. And of course, we have branding and marketing experts. You need this. You need the entire ecosystem that we've just talked about here. We have those persons in our midst to really work with you in those regards. So it has been a pleasure being with you today again. Do enjoy. Remember, access to capital is an essential part of doing business. Research conducted by Global Capital Inc. and 10X Branding Marketing LLC out of New York is showing that over $1.7 trillion is available among private equity investors in dry powder. Now, in spite of this, we're seeing micro, small, medium, and large-scale businesses across the world continue to struggle to raise capital to invest in the growth, diversification, and the scale-up of their brands. The private equity investors, they are thinking cash flow, and they are thinking risk control. And if you're able to put yourself in that position of strength to be able to speak to these two issues, cash flow and risk control, you may be very surprised to see how quickly you can access equity capital market when your brands are positioned in front of the right private equity investors. I want to encourage you to Join me on this journey as we continue to do a deep dive into best practices to access the capital market. In this program, we will continue to look at the credit capital market, the debt capital market, equity capital market, and smart capital market. Join me as we explore the world of finance. Be blessed and see you soon.